The following is a presentation of TFNN.
Next up, we're going to go to Florida, Titusville. Nick, thanks for hanging on the line. How you doing today?
Hi, yourself, sir?
I'm doing well.
Ken, I want to say I'm 84 years old, and the way you explain things makes it very easy to follow.
That's very nice of you to say, Nick. I appreciate that very much.
Have a good day, sir.
All right, you too.
Live at TFNN. Breakout Investing with your host, Ken Shreve.
Welcome, everyone. Happy Monday. Welcome to another edition of Breakout Investing on TFNN. 877-927-6648. That is the number to use if you want to give me a call, talk about this market. You know by now you can catch my show every day, Monday through Friday on TFNN from 3 to 4 Eastern. It's also available as a podcast on iTunes if you can't listen live. And don't forget, you can listen to all TFNN programming on your smartphone. Just type in tfnn.mobi in your smartphone browser, and you can listen to the stream that way as well. Don't forget about Tiger TV on the homepage of TFNN.com. Channel 1, the show is carried live. It is archived in Channel 13. And with Tiger TV, not only do you get the show audio, but you can also look at charts live right along with me. And Tiger TV is also viewable on your handheld device. All you have to do there is open your smartphone browser, type in tfnn.com, and then over on the top right-hand side of the page, just click that box with the mobile devices in there, and it will recognize what kind of device you have and start streaming right on your cell phone. Another constructive day of trading for the market here. Let's start by taking a look at the NASDAQ Composite, trading in a very tight range. Today hits a high of 31.94, a low of 31.82. Trading at 31.87, down 0.2% on the day, about 6.5 points. So NASDAQ Composite stubbornly holding on to recent gains here. So far so good in terms of this uptrend. S&P 500, very tight trading range for the benchmark index as well. It is only down about 2 points. Last trading at 1516, and the Dow Jones Industrial Average also trading in a relatively tight range, down 28 points right now to 13,965. So you've been hearing it. I've been hearing it. Lots of calls for a market pullback here. Yeah, some of the sentiment indicators are pointing towards some increasing bullishness, but still hearing people saying that, more and more people, I should say, that stocks are due for a pullback. And as I've been saying, listen, it's not a bad argument. When you have a lot of extended stocks out there, a lot of stocks that have been running higher and higher and higher, a lot of financial stocks very extended out here that probably could use a breather. And so I wouldn't be surprised to see it. Going into today, if you read IBD's big picture column, you know, the distribution days are out there. I think on the NYSE Composite, we had 5 headed into today, 5 higher volume declines, 4 for the S&P 500 and 3 for the NASDAQ, or it was 4 for the NASDAQ and 3 for the S&P 500. Either way, mild distribution is out there. It's not like we're seeing, unequivocal signs of institutional selling in this market. By and large, leading stocks continue to behave quite nicely. Yes, a lot of extended stocks out there that could probably use a breather, so wouldn't be surprised to see them pull back. Question is, will that be the spark that starts a market pullback here? As far as current holdings in the Ultimate Growth Stocks model portfolio, that's the newsletter that I run at TFNN. We've been trimming very selectively, especially during earnings time. Holding growth names around earnings can be risky, so in some cases trimming, taking partial profits, other cases selling outright, but we've got 2 model portfolio holdings set to report earnings this week, and we'll decide what we're gonna do with them. But overall, it's been a pretty good earnings environment. So. And with really nothing in the way of sell signals in the major averages, I'm really in no rush to sell stocks that are working. There's nothing worse than taking profits in a potential big leader too quickly. So want to be patient here. Let what's working continue to work. Volume today in the market tracking much lighter than what we saw on Friday. I guess that is a good thing. Volume on the NASDAQ right now tracking about 10 to 15% lighter than Friday's volume of 1.78 billion shares. On the New York Stock Exchange, we're tracking about 5 to 10% lower. Volume Friday on the NYSE, very light at 575 million shares. April gold today under pressure again, down $17.80, a 1.1% decline for gold. Settled at $1,649.10 an ounce. Taking a look at the GLD, again repeated resistance at the 50-day moving average here. Gap below the 200-day moving average for the GLD today. It is down 1.2% now to 159.67. 159.67 for the GLD, and you can see in Tiger TV it's getting pretty close to a couple of recent lows out here. 158.39. 158.39 would be this December intraday low right here, and also 158.89. 158.89. That was the intraday low set on January 4th. So we'll see. Again, you want to see what the volume looks like when it tests these lows here. If it goes down there in very, very heavy volume, you can see there's a lot of big volume here. That low, that 158.39 low, that was on volume of 25 million shares. So if these lows get tested in pretty light volume, you could see a bounce in the GLD. But overall, the GLD's technical picture looks pretty weak here. U.S. dollar index down just a little bit today. Last trading at 80.21, down less than 0.1%. March crude oil, let's see, up $1.31, 1.4% gain, settles above $97 a barrel, closes at $97.03 a barrel. Bond yields slightly lower, yield on the 10-year note 1.95%, 30-year bond 3.15%. Nothing in the way of economic data today. Pretty quiet week. Tuesday we've got Treasury budget for January. Not going to be a market mover. Wednesday, be interesting to see what January retail sales have in store. That will be Wednesday. On Thursday, weekly jobless claims. Friday, Empire Manufacturing for February. Industrial production capacity utilization for January. And also University of Michigan consumer sentiment for February will also be out Friday. So pretty quiet out there in terms of economic data. We do have a bunch of earnings reports this week that we'll get to in just a little bit. But first, let's check on shares of Apple today. AAPL working on 3 straight gains here. Apple up $4.32 today, off its highs, only up about 0.9% to $479.30. Significant resistance for Apple at the 50-day moving average at 507. That could be a tough nut to crack for Apple, but there are some potentially newsworthy items coming up here. Tim Cook tomorrow speaking at the Goldman Sachs Technology Conference at 10:15 a.m. Eastern Time. That is tomorrow. Apple also has its shareholder meeting on February 27th. There was a story over the weekend. This is not new news, but seems to be gaining traction that Apple is working on some sort of wearable computing device, perhaps an iWatch type deal. And I don't know. I mean, I don't know if I'm in the minority here or what, but an iWatch, that seems to me to be a company that is really trying to really struggling here, trying to innovate. It's almost like they're asking, what is that next new product going to be that's going to drive earnings and sales growth? What's going to drive meaningful growth going forward for Apple? Is it going to be ITV? Is it going to be a a wearable computing device. It just doesn't look that good, frankly. I think Apple has its best days of growth are most likely behind it, and that is why you've seen the stock go from 700 down to its a recent low here around 440. It's about 40 points above that low, but serious concerns about where new growth is going to come from Apple. So who knows? Maybe we'll get some additional color from Tim Cook tomorrow at the Goldman Sachs Technology Conference. If he were smart, he would hint at something. Another potential catalyst for Apple is what it's going to do with its huge cash position. Remember, more than 50%, I think it's something like 70% of Apple's cash is overseas, so it's not as easy as just buying back shares. If they are going to return cash to shareholders, they may have to take on some debt because of the large cash position overseas. We'll see what happens. But there are a couple of catalysts coming up here, so we'll see what happens with Apple. Nice follow through for LinkedIn today. LNKD. This is a current holding in the Ultimate Growth Stocks model portfolio. We initiated a position in LinkedIn. Mentioned this late last week when it gapped up on. When was that? January 2nd, I believe. There was January 10th, actually, was when LinkedIn gapped up here, broke out of a nice little base. It's been a pretty easy stock to hold, but it's up another 2.9% today to 154.78. Of course, earnings last week turned a lot of heads. Our earnings were up 192% from a year ago to 35 cents a share. Sales up 81% to 303.6 million. So definitely a company firing on all cylinders here. In no rush to take profits here. We're going to let our winners run here. This one really has the look of a potential monster stock, and when the market does pull back, LinkedIn is going to pull back along with the market. But when you have a nice cushion, it makes holding through normal market pullbacks much easier. So that's always the goal, to build up a nice cushion and profit in a stock so you can sit tight through market pullback. So in no rush to sell LinkedIn here. Another newsworthy stock today. Let's take a look at Regeneron Pharmaceuticals. This is a stock that at one point was a holding in the Ultimate Growth Stocks model portfolio. Sold this probably a little bit too early, but did book a decent profit. It was up big early today. You can see it has reversed and is near its session low after early strength. The stock hit an intraday high of 182.59, last trading at 169.87. Still up 2.4% on the day, but trading near its session low. News here is that Sanofi is going to increase its stake in the company. Sanofi and Regeneron collaborate on a cancer drug called Zoltrap. The drug was recently approved by the FDA as a treatment for colorectal cancer. Regeneron reports earnings this Thursday. So we'll talk about Regeneron's earnings report when we come back. Thanks for tuning in, folks. Headed into break number 1, Breakout Investing on TFNN. We'll be right back.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks, to Breakout Investing on TFNN. Ken Shreve with you, 877-927-6648. Just finishing up on Regeneron here. Earnings are due Thursday this week. They are expected to earn $1.11 a share, reversing a year-ago loss. Big sales growth, up 219% from a year ago to $392.6 million. Its flagship drug is Eylea, which is used to treat wet age-related macular degeneration, leading cause of blindness in elderly people. Technically looking pretty weak headed into today. It had cut below its 50-day moving average, really just retesting its last breakout area here in November. That is not unusual for a stock to do. Big gap up for the stock today, again on news that Sanofi is going to increase its stake in the company, but so technically does not look that hot here. All right, so that's Regeneron. We'll see what they have to say Thursday. Let's take a trip over to Burbank, California, talk to John, who wants to talk about an interesting company, UNXL. This is Unipixel. Is that right, John? Are you there, John?
Yes, I am. Hi, Ken.
How are you, sir?
I'm doing fine, thank you. I really enjoyed the show.
Thanks very much. Appreciate it.
Yeah, wondering what you think of the buy point is for UNXL. I have a limit order at 16. It's a little above that, but it's really up big today, up 14%. And I'm a MACD trader, So it looks like it's time to buy. Just want to see what you think.
Well, there's no doubt. Technically, it's very strong here. It is definitely showing some renewed signs of accumulation. You have a nice percentage gain in the stock today, and you've got some volume there as well. It is it is on the speculative side, so I think this is. It's a little more risky than usual just because it's a, market cap of below 200 million. It's fairly liquid, average daily volume of around 725,000 shares. So for a technical buy alone, yeah, it doesn't look bad. Doesn't look bad at all here. I like buying stocks that are under accumulation, and really over the past 5 or 6 trading sessions, it looks to me like there've been some decent buyers of size in this stock.
Do you use MACD as a reference point to get in and get out? Because that's kind of like what I'm doing. Am I missing something?
I don't personally use those. My technical analysis training was with Investors Business Daily for, 10, 12 years, something like that. And so that was, I know people that use them, that use MACD and, oscillators and things like that. But I don't, so I wouldn't know. You're saying that your indicators are telling you it's a buy right now?
Yeah, it's today it is. Yesterday it wasn't, but it's up so much today, 14%, that I put a lower price in because I think it's just going to maybe drop down a little bit.
Yeah, well, it looks like I would expect support like I don't know, right around that maybe 1550 in that area. Maybe it's intraday low today, but I do like the fact that there's some volume expansion today, and it is taking out a high set last Wednesday of 1680. So technically overall price and volume trends, the structure. It doesn't look bad. I mean, it seems like it would be. You could nibble right here. I wouldn't disagree with that.
Great. Well, thank you so much. I really appreciate your show.
Okay, John. Thanks for the call. Appreciate it as well.
Thanks, Ken.
All right. Take care. All right. Next up, going to go to Nashua, New Hampshire. I bet you they got a lot of snow there recently. We'll have to get a snow update from Steve before we talk STP. How you doing, Steve?
Good, Ken. Yeah, we got bombed here. Actually, now it's pouring rain.
What does bombed mean? Did you get more than 2 feet?
Yeah, the drifts. I measured a drift that was just shy of 3.5 feet.
Wow.
But actual was 22 inches.
So I have a lot of friends on Facebook from Rhode Island where I grew up, and that's where social media is really great these days because you could just kind of keep track with everything that was going on. I mean, now, did you lose power for any amount of time, or?
Surprisingly, not many people at all lost power in New Hampshire, but we have a generator just in case. But no.
That's good. That's good. Well, I was able to keep up with the pictures, and it looked like I was around for the blizzard of '78 in Rhode Island. That was. I'll tell you what, Steve. I hate to keep you hanging on, but we've got another break coming on. It's gonna be about 3 minutes or so. I'll just I'll hold you over, and we'll talk STP when we come back. Okay.
Great. Thank you.
All right. Sit tight. All right, folks. Another break coming up. We got Steve from Nashua, New Hampshire. We're going to talk Suntech Power Holdings STP when we get back. Stick with us.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, folks, to Breakout Investing on TFNN. Ken Shreve with you. Quick check on the markets here. Dow down at 19 points, 13,974. NASDAQ Composite trading in a tight range, down a little more than 3 points to 3190. S&P 500 down fractionally to 1517. Steve from Nashua, New Hampshire, thanks for hanging on the line, and we're going to talk Suntech Power Holdings. What are you doing with the stock? Do you own it? You want to buy it?
No, I don't. I just saw it, Ken, and I see that early December it seemed to start to rise up. It looks like your classic ABC to me from early December, up on big volume, back for a third test, I think, just yesterday maybe, on even less.
Yeah, no, I think you're right. I think this looks. I think it looks pretty good. I normally myself for the Ultimate Growth Stocks model portfolio don't look at cheap stocks like this. It's trading right now at $1.53. But yeah, the stock, the accumulation phase in Suntech definitely started in December, and you have a swing point out here of $1.99. That was the high it set January 4th, and now it is coming back and setting another Well, it's low today of $1.42. But what you see here is a stock that's kind of bouncing off support, and there's not a lot of volume behind the move today, but it does look like a fairly low risk entry point here to me, just because of it was heavy volume gains from December into the beginning of this year, and then basically a low volume pullback to support, and then a bounce off of support today. So,
right.
Not exactly my cup of tea, but technically it looks pretty good here.
Yeah, you can see back in the day there, way back in 2006, it was, 14 or so, and it just dove down to the bottom. And it's been creeping on the bottom ever since,
Yeah, solar stocks, are seeing, renewed interest here. First Solar. In fact, I took a call last week on some solar names. Not Suntech Power. It's a stock that's come well off its highs, but again, the bottom line is it is a stock that over the past several weeks has been showing renewed signs of accumulation. And you've been listening to the show any amount of time. I like to swim with the tide and buy stocks that are under accumulation. So
I'll definitely keep my eye on it. Just one caveat for you. In the news, anyway, it says that they just completed the largest solar panel project. It is the largest in Saudi Arabia.
Oh, is that right? Suntech did?
Yeah.
Yeah.
That's what the news says, anyway. Yeah.
Well, that is...
I'll keep my eye on it for sure.
Yeah, no, definitely looks pretty solid here, and the people over at Investors Business Daily give it an A, for an accumulation distribution rating, which is pretty. That basically looks at price and volume over the past 2 to 3 months and tells you there's a lot of up volume or a lot of strong volume behind up days and not much volume behind down days. So technically, that's a pretty good situation to be in.
That falls right into Tom's model.
Yeah, absolutely.
Perfect, great. Well, hey, thank you very much.
Okay, Steve, take care, bud.
You too, bud.
All right, Steve, digging out of snow there in Nashua, New Hampshire. Hope all the people, friends of mine in Barrington, I think they just got their power back on today. So cooking breakfast out in the driveway with these stoves and making coffee. I can't even imagine. But anyway, that blizzard of 78 was quite a big deal, too. That was, I think we had 3 or 4 feet of snow back then. So... anyway, all right, well, let's check in on some other stocks today. Ruckus Wireless, RKUS. I know we had talked about this one last week. This is a new issue that is reporting earnings after the close tomorrow. RKUS is the symbol here. They are a provider of Wi-Fi systems to enterprise telecom customers. Big move for the stock on Friday. It is up another 2.1% today to $25.50. So maybe some optimism about earnings. They are expected to report strong growth. 5 cents a share would be up 25% from a year ago. Sales up 47% to $60.46 million. So keep an eye on Ruckus Wireless. They report tomorrow after the close. Remember, not that long ago, we heard from Green Mountain Coffee Roasters. They reported so-so earnings last week there, and stock has been under selling pressure. Now looks to extend losses, I should say, for 3 days in a row, coming quickly down to its 50-day moving average. Stock got a downgrade today from Dougherty, from buy to neutral. But again, earnings last week, they weren't too bad. 16% revenue growth was a pretty big deceleration from 33% growth in the prior quarter. So when you're a growth stock showing decelerating growth like that, that's a problem. And their revenue growth for the current quarter was a little bit light. So Green Mountain remains under selling pressure. Tesla Motors, very interesting. First of all, it's hard to... There's a lot of earnings confusion about when this company is going to be coming out with earnings. They thought it was supposed to be today. It should be sometime this week, but no earnings date that I can see yet. It's under pressure today, down 2.2% to 38.37. Apparently, the New York Times came out with an article. One of the writers took the Model S sedan for a test drive. And the article said that the cold weather reduced the car's range between charges. And this was, again, according to a New York Times article. I believe it was over the weekend. Elon Musk, who is the founder of Tesla Motors, tweeted today, put out a tweet on Twitter, quote, "Vehicle logs tell true story that he didn't actually charge to max and took a long detour." So Elon Musk from Tesla Motors basically calling this New York Times article a fake. So we'll see what comes of it all here. Tesla Motors under a little bit of pressure today. It's been, nice breakout for the stock, no doubt. Has been on a nice little uptrend here. When they do report earnings this week, they are expected to lose 53 cents a share. And revenue should be at around $298.9 million. But company's really ramped up the production of this Model S sedan, electric sedan, and it's a nice looking car. Gotta give Tesla credit there. They do make nice looking cars. Let's take a look at Google as well. Google also in the headlines today. Executive Chairman Eric Schmidt, he used to be CEO of this company, in a regulatory filing, he said he is going to unload up to 3.2 million Google shares. That would be about 42% of his personal interest. Google was down early on the news, but it has fought all the way back, now down $2.92 to $782.45. All right, let's go to Roger. Mount Vernon, Washington wants to talk Amazon. Sorry I left you hanging there for a little bit, Roger. Thanks for holding on. How are you today?
No problem, Kenny. I'm good. How about you?
I'm doing fine.
Yeah, I'm looking at Amazon. I'm, kind of curious whether it's to buy or not.
Yeah, this one is just not acting right, and I don't like to buy stocks that aren't acting right. There have been some big sellers in the stock. It is trying to find support at its 50-day moving average. It's having problems doing that, and I think because of that, we could see lower prices ahead. At the very least, if you do want to own the stock at some point, you have to see how this consolidation ends. If it's gonna put in a bottom, it looks to me like it wants lower here. But if volume has dried up over the past 4 or 5 days. It's trading near its session low, today. Not much juice behind the selling, so you just want to start to see renewed signs of accumulation in the stock before you consider buying. I think it's way too early at this point. Okay,
you think it's going lower then?
When I look at how it's traded over the past 2 weeks, I see some. I'm not seeing blatant institutional selling, but certainly. Let's see, we're looking at a price bar here back on January 29th. That was, pretty bearish day for the stock. I see a rally back the very next day where volume was very heavy, but it closed in the bottom half of its range. That told me that there were still sellers in the stock. 3 days in a row down, 1 day up, 2 days down. It just sellers look like they're in control for now. So, to me, its 200-day moving average is all the way down at 240. That's about 17 points. 17 points below where it is now. If it doesn't get down to its 200-day, I'd be looking at those lows around 240, 242, 243. In that area, which actually isn't that far from its 200 days. So to me, it looks like it's too early. And if you were to put a quick trade in here, keep a tight stop, and you get a few points of profit. Don't be afraid to take it off.
Yeah, a lot of work.
Yeah. It looks to me like sellers are still in control here. That's the problem. I just said a lot there, but sellers are in control until proven otherwise. Now, you get a big up day, and you see a good up day on volume, say, 5.5 million shares, a close near highs, signs that buying demand is starting to pick back up. That's having the stock prove itself to you. It's saying, okay, the sellers aren't as much in control as they were, and buying now, you're kind of swimming against a negative tide, which I always teach is very tough to do.
Yeah. Well, considering the market conditions we're in too, it's a little hard to make a call one way or the other.
That's true too. It's not an easy market right now. I mean, the major averages are not doing anything wrong. I like the tight trading that they're showing today, but it's not clear that they're ready to start another leg higher, and it's not out of the question that we could, come in because of the number of extended stocks out there. Out of all the stocks in my screens, and Amazon is one that I follow, there are very few growth charts that look like Amazon. In other words, most of your top performing growth stocks are all holding above support and really not showing much in the way of sell signals at all. Amazon is really kind of like the lone wolf out there. Some stock that is just showing very suspicious price and volume, but it's definitely the exception and not the rule right now.
Yeah, it's very peculiar. I was checking on Coors too, KORS, and I can't quite figure this. I can't quite figure this one out either.
This is,
it doesn't want to do anything.
Yeah, well, this is tough because they have earnings in the morning, so we're going to have to see what their earnings report looks like. They report tomorrow before the open. Another strong quarter of growth is expected, and it's been sluggish. I thought it would have moved more by now, and in fact, you go back and the day it tried to break out and reversed and finished near its session low, it kind of stalled there. It hit that high of 60 back on January 28th. Bottom line, technically it's not doing anything wrong, and I'm expecting very, very strong numbers from this company. But this would be one tomorrow where, if the numbers are better than expected, which I think there's a very good chance that will be the case, I would not be afraid at all to buy it on the gap up.
You think it's going to be a leader going forward then, huh?
Well, it has it almost is a completely different business from LinkedIn, but it's that type of potential model book stock. And I spent more than 10 years at IBD, and you have these stocks that are, newer companies still in the early stages of growth, and LinkedIn is in that boat, and Michael Kors, even though it's been around for a while, there's still a lot of room for growth as they continue to take share from Coach, and they're still in the early stages of expansion, and their numbers up to this point have been super strong, and it should continue to be the case for some time to come. But I don't think it's a buy ahead of earnings. That's kind of rolling the dice and saying, geez, I hope it goes up after earnings. I'd rather wait and see what the numbers look like, and if you get a gap up and really, really strong buying demand, we bought LinkedIn when it gapped up on January 10th, and that turned out to be the right time to buy it. So now we'll see what the numbers look like in the morning.
Oh, I didn't realize it had earnings tomorrow. So.
Yeah. First thing tomorrow before the open.
Before the open. Okay.
Yeah.
All right. Well, thanks a million, Kenny, and have a good week.
Okay.
Still weather gets better down there, and you can get out and swat a few golf balls around.
Exactly. All right, Roger. Thanks for the call. Always good to hear from you.
Okay. Thanks.
All right. Take care. All right, Roger, Mount Vernon, Washington. Amazon is one of these stocks that just is not acting right. And when a stock isn't acting right, you really have to listen to the price and volume. And you see back over the past 2 weeks, a lot of closes near lows, feeble rally attempts, can't hold its 50-day moving average. Buying demand has completely dried up in Amazon. Of course, we'll see what the numbers look like tomorrow morning. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91. And only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just 1 position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back. Checking in on the NASDAQ Composite here. About 5 minutes left to go in Monday's session. Trading in a very tight range, up near its session high. Look at that, down 2 points now for the NASDAQ to 3192. 3192. S&P 500 trying to turn positive here, up near its session high. Also trading in a very tight range here, down fractionally to 1517. And the Dow Jones Industrial Average trying to close near its session high. It is now down 16.5 points to 13,976. Do have some earnings reports after the close today. Just one, actually, that I'm looking at, NCHL. This is another new issue here, NCHL. Do I have the wrong... no, NCLH. God, these tickers are so confusing. NCLH. There it is, Norwegian Cruise Line. This company came public not that long ago. Came public in January last month at $18 a share. Stock is trading at $27.65, so it's been a tremendous debut for Norwegian Cruise Line Holdings. It is down 26 cents today to $27.65 ahead of the results. Look for a profit of 1 cent a share. Sales up 5% to $512.7 million. You know, I don't understand the fundamentals of the cruise line business, but the fundamentals at Norwegian Cruise Line look quite good, as a matter of fact. Their full year earnings in 2012. So what we're going to hear after the close is going to be fourth quarter results, but for 2012, annual earnings are expected to be up 34% from 2011, and annual earnings are expected to accelerate in 2013, up 52% from 2012. So it'll be interesting to hear what NCLH says after the close. Talked about Michael Kors, Kors, reporting earnings before the open tomorrow. It is just kind of treading water here, down 11 cents to 56.99. Good fundamentals at Michael Kors. The estimate is for earnings of 41 cents a share. That would be up 105% from a year ago. Sales up 45% from a year ago to 540.3. We're also going to hear from Rackspace Hosting. My friend Bob Lang from explosiveoptions.net said that he was seeing pretty bullish options activity in Rackspace ahead of earnings tomorrow. It has been trying to firm up at its 50-day moving average, having some success today. Volume looks like it's going to be higher than Friday. It is up 2.2% to 75 ahead of the results. Look for a profit here of 21 cents a share. Earnings, that would be up 17% from a year ago. Sales up 26% to $355.4 million. The company still gets most of its revenue from managed hosting services. It gets about 25% of its revenue from cloud products. At the end of this week, IPGP, this is a company called IPG Photonics, and they make fiber lasers, fiber amplifiers, diode lasers, things like that. Stock reversed, finished near its session low Friday. It hit an intraday low today of 66.34, trading up near its session high at 67.24, only up about 2 cents on the day. They report later this week on Friday, and look for earnings to be up 13% to 72 cents a share. Sales up 19% to $147.2 million. My next update to Ultimate Growth Stocks, my newsletter will be out tomorrow morning. Be sure to check out 30 days free right on the homepage of TFNN.com. Just click on the investment newsletters. Click on the newsletters tab, then investment newsletters. You're going to have a brand new watch list section, update current holdings. I'll see you back here tomorrow, 3 o'clock Eastern, for another edition of Breakout Investing. Have a great day, folks.